Andreas Dombret is here, the member of the executive board at Deutsche Bundesbank. Good morning, Andreas, and thanks for being with us. Just be interested just to get your initial thoughts on what happens if we start to see some of these bigger banks moving a large number of people out of London. I mean, you must be hoping that they all come to Frankfurt.
You know, I don't think so. That my hope is really relevant here. What we are interested in is that the single rule book prevails and that it doesn't really matter from a financial stability point of view whether banks who want to relocate to Frankfurt, Amsterdam, Paris or Dublin. It should make no difference. What really is important is that the corporates in the Eurozone get all products in a competitive manner with as little disturbance as possible, and we think that the markets will adapt regardless of whether they will come to Frankfurt or not. I'm pretty convinced there will be not one winner, but there will be some sort of fragmentation in the relocation. We expect actually, and I personally expect, for those banks who do want to relocate to make a decision in the first half of this year.
How big a portion, though, if you look at some of the banks that have indicated already, we have a number of them, UBS, HSBC, Goldman Sachs, rumored also to possibly be putting a large number of people out of London. How big a portion of that do you think that you'll be able to get in Germany?
That is really too early to say. I agree with the quote of Benoit, who was just online before me. It is too early to tell, and it's not for us to give any advice. This is a private sector decision. The private banks are making their decision. We're not going to advise them. When they come, wherever they go, regulators will have to, and supervisors will have to be ready. They'll have to have the thought process well advanced, and this is the reason why I do understand why many banks are visiting supervisors like myself on a regular basis, trying to find out what would we have to expect should we relocate, let's say, in that case, to Frankfurt. So I have had a significant number of visitors on this topic, and we are talking to everybody. We're not advertising our financial center.
Sure. The City UK, which is a financial lobby, a very powerful financial lobby in the UK, they're suggesting limited market access for some finance sectors. How would that possibly work?
You know, you have to ask the City of London, and I think what they're really putting forward is this idea of equivalence. I am not so sure whether equivalence is a substitute, a real full substitute for passporting. So you have to ask the City of London about that. Every suggestion is welcomed, but the question is, if I think about a relocation, or partial, of course, relocation, do I have enough of a legal basis, do I have enough of an economic basis to really base my decision on that? And that passporting will always be fine.
Yeah.
Whether equivalence or not is fine is somewhat of a two-way concept for me right now to make a decision.
What do you think the biggest risk is if looking at a suggestion like that versus straight-out passporting as well? Where does the biggest risk lie for the markets?
I don't want to comment on a suggestion where I know far too little about. I know what passporting means and that this will work, and everything else we have to see. The real question is this a one-to-one substitute? I don't think so.
I look at the merger as well, LSE Deutsche Börse merger talks continuing as well. How would this shift the landscape, do you feel, for trade and also cross-border trade?
This is an ongoing process. Right now, the European Commission is looking into a special aspect of competition issues. I don't have any say and no will of saying anything about this, so we have to wait for this. And then eventually, should this hurdle be passed, Germany and in particular the state of Hesse will have to think about their approval. From an economic point of view, clearly in times of renationalization, international cooperation is something which as a concept I do like, I do support. Clearly it needs to be implemented in a sensible way, but to have a bridge between the largest and most significant financial sector in Europe on the one hand and financial center in Europe, and on the other hand the largest economy, does make a whole lot of sense, but it needs to be implemented in a sensible way and it needs to pass those hurdles. And I do believe that it can make a big difference in terms of international cooperation, and I see the logic.
Yeah.
And perversely, if I may add, the Brexit decision is making the business case of a London Stock Exchange Deutsche Börse merger even more compelling, which is one of the few cases
Sure.
where this happens.
Merkel campaigning for a fourth year in office as well. You've got the German economy growing at its fastest rate in 5 years. It's just shy of 2%, 1.9% for 2016. You haven't needed to go for new government borrowing for quite some time. You're also looking at a public sector budget surplus well above 6 billion euros at the moment. Do you think it's now becoming Germany's role to help some of the weaker outliers even more in what we know as the EU now?
The way I look at it is that Germany and others, but also Germany, is a stability anchor for the Eurozone and for the European Union. And we do help the Eurozone and the European Union by having a strong, sustainable economy. So there is some help in it in itself. We trade mostly, not exclusively, but mostly with other European countries. So this is why it would be not good for the European Union or for the Eurozone if we would go slowly and if we would go softer. So
Sure.
a strong economy makes sense.